If you have a friend who also provides breaking news, then be cautious. When investing in the stock market, if an investor wants to avoid something first, then it's rumors. This is because it has been observed that about 60% of the movement in shares is based on rumors. Only 40% of trades are based on solid news or reliable information. This is a harsh reality. In fact, before any news arrives, the market starts making its assumptions or estimates. The nature of the market is such that it tries to discount events or news before they happen. That's why most analysts make their target evaluations keeping in mind the value of the shares at least a year ahead.
Fundamentals play a role in the price of any share much later. In most cases, it's observed that when news comes from reliable sources, the share price tends to have the opposite effect. There is a saying among share traders, buy on rumor, sell on news, which means buying a share before positive news arrives and selling it on the day the news comes to collect profits. But this strategy is dangerous for the average investor. The average investor receives information late and their sources are not reliable, which leads to them feeling cheated later and losing their hard-earned money. How do rumors spread in the stock market? There are several mediums through which rumors spread in the stock market. Some of them include newspapers, business news channels, social media platforms like WhatsApp, Telegram and YouTube, and websites. So who spreads these rumors? Generally, these rumors are spread by the people that have invested in these companies. If they have taken a long call, then they try to spread positive rumors. And if they have taken a short position, then they try to spread negative news about the company. Besides TV channels, newspapers, WhatsApp and Telegram, articles are also published on the internet. Similarly, SEBI has investigated fake WhatsApp and Telegram channels at different times. In a lot of cases, fines have been imposed and channels have been banned.
Now let us see how stocks move on the basis of rumors. On the 14th of June 2023, there was news in the newspapers regarding Vodafone Idea. It was reported that the company has proposed an investment of 14,000 crore rupees under the Business Revival Plan. As per this proposal, the promoters of the company, Aditya Birla Group and UK's Vodafone Group, will invest half of the amount. Due to this news, the shares of Vodafone Idea witnessed a jump of more than 7% on the 14th of June. Within the first 5 minutes of trading, the shares reached an intraday high of 8.25 rupees. However, the closing was only a 2% increase, showing some strength. This means that those who spread the rumor sold their previously bought shares at a higher price and took advantage of the situation. So the point is, neither company's management nor any banker or promoter said anything about the company. In fact, few days prior to that, Vodafone Group actually declared its investment in that company to be zero.
Let's take the example of RBA, which was previously known as Burger King India. After the announcement of the fourth quarter results on 18th May, there was a momentary upper circuit of 20% in the shares of Restaurant Brands Asia. This happened despite the fact that the company's losses increased from 61.1 crore rupees to 73.4 crore rupees in the fourth quarter. In reality, the share price jumped due to rumors. The rumor was that the private equity firm Everstone Capital was in talks to sell its entire 40.9% stake in the company. According to reports in the newspapers, Jubilant FoodWorks was also seen as a potential bidder to purchase this stake. This was the reason why there was a 20% surge in RBA shares on Thursday, 18th May. However, Jubilant FoodWorks deemed these reports as baseless and denied the news of purchasing the stake. On the other hand, there hasn't been any solid news regarding the sale of stake by Everstone Capital, even though more than a month has passed since these speculations began.
Most analysts discuss news-driven stocks on business news channels or social media platforms, but these stocks are actually rumor-driven stocks. This is because most of these stocks are the ones that make headlines in the morning newspapers, but there is no one to confirm their authenticity. However, traders who trade in these stocks can make significant profits from them.
SEBI, the market regulator, has cracked down on several groups that make money and trap small investors based on such networks or rumors, and in recent times, the regulator has taken several strict steps. SEBI believes that news is only valid if confirmed by the company. Therefore, SEBI has recently decided that the top 100 companies in the country will have to disclose within 24 hours about any rumors related to them and how much truth is there in the news. Now the question arises, what are the authentic sources to gather reliable information? There are 3 to 4 main sources to gather reliable and solid information about any company. The first is stock exchange websites. The second is company's own website or investor presentations. The third is investor con calls or TV interviews. The fourth is company's financial statements and annual reports, etc. So, you should rely on information or rumors only if they are confirmed by these sources.
So if anyone is trading in shares, make an effort to find out what is happening in that company, what is going on inside that company. Do not make investment strategies in the stock market based solely on rumors. Instead, invest in a share based on solid or reliable information. If there is still any confusion, seek advice from your investment advisor. If you base your hard-earned money on hearsay in the market, it can lead to significant losses.